Denne episoden er en del av et sponset samarbeid mellom podcasten 1Case og Hilbert Group. Målet med episoden er at alle dere lyttere skal få bli kjent litt grann med den nye CIO-en Russell Thompson, og ikke minst høre litt om hva han tenker om veien videre. Vi røk dessverre på litt tekniske utfordringer med opptaket, så jeg prøvde å spille inn noen av spørsmålene på nytt. Men svarene er i sin helhet som de var fra Russell. Uansett, jeg håper det er nyttig og nyt. Kjør intro! Du lytter til podcasten 1Case, det er investor Bjørn Kristian Stadheim og jeg, programleder Peter Åsat Karlsson, går i dybden i 1Case per episode i jakten på de gode investeringene. Innholdet i denne podcasten er kun for informasjons- og underholdningsformål og skal ikke oppfattes som investeringsrådgivning. Både vertene og eventuelle gjester kan ha direkte eller indirekte posisjoner i de instrumentene og investeringene som diskuteres. Vi tar forbehold om at feil kan forekomme. Hei og velkommen til podcasten 1Case. Denne gangen et spesialintervju med Russell Thompson fra Hilbert Group, som er i Oslo på et roadshow. Welcome, Russell.
Hi, how are you? Nice to meet you.
Nice to meet you. How's it going in Oslo? Have they been nice to you?
It's a beautiful sunny day. It's a lovely city. Lots of people on bikes. I like Oslo. It's very nice. It's only the second time I've been here.
That's good. That's good. I'm glad to hear. We're a bit short time in a tight schedule. You're a very busy man, so we have 4 topics we're going to go through today. We want to introduce you to all the listeners. We want to hear a little bit about the strategies you're managing for Hilbert Group, and of course your recent increased stake in Hilbert Group of 25 million SEK, and a little bit of the outlook of Hilbert Asset Management. So let's start with an introduction. You are the new CIO. Please tell us about your background.
I've been in asset management for 37 years. I know I look very young and handsome, but I'm actually quite old. I used to worked out of Asia. I ran trading desk for HSBC in Hong Kong, and then AIG Trading in Asia. And then I founded a hedge fund, or co-founded a hedge fund with my partner, Peter Hendricks, back in 2003, called Cambridge. Cambridge was a moderately successful. We raised north of $3 billion of AUM from like 2003 until 2018, where unfortunately my business partner at the time, Peter, contracted terminal cancer, and so we decided to exit the business, and we sold it to a very big North American fund of funds. At that stage, I was in Monaco, living in Monaco. Cambridge had 5 offices around the world and were regulated in 7 jurisdictions, but I was based out of Monaco, and we did most of our trading out of both London and Monaco. And then I founded a family office in Monaco, and then founded a digital asset manager called Liberty Road back in around 2019. Liberty Road has been focused on yield enhancement strategies, primarily in Bitcoin. And I first met Nicholas and Magnus, who are the 2 founders of Hilbert, and Benali, the CEO, in Monaco in the summer of last year. Very, very smart people. I had 2 co-founders as well. One of them, Tom Bowles, was a PhD in mathematical forecasting from Oxford and specialized in AI. And obviously, Nicholas and Magnus have got like quantum physics as background. So between us all, not me, but between us all, there's quite a lot of intellectual capital in the firm, and we got on really, really well. You know, Magnus and Nicholas have got real integrity, which is very important in the digital asset space. You know, through 15 years of building Cambridge, I had sort of I knew how to get from A to B to C to D to build a good asset management business. And you've got to go and have the infrastructure in place, you know, the legals, the operations, the KYC, the compliance, the tech. All of these things are really important to build, and a lot of people make the mistake of focusing just on the alpha generation and building the AUM. But to scale a successful business, you've got to have all this other stuff, and it's not particularly exciting, but it's necessary. And I didn't really have the appetite to go and do it a second time in terms of the infrastructure build. And Hilbert have all that. You know, they've got all of those things in place. So the business was really set to grow. But what they didn't really have was scalable product. And so we brought that with us, with Liberty Road. So we sort of, we met on the dance floor, as it were, in December of last year. And, you know, I kissed the girl in March. And, you know, here we are, you know, that we now have a business. I know that if there are sort of long-term Hilbert shareholders that are sort of listening in, they might be a little bit frustrated. I would say we're really in Hilbert version 2 now, in that we have really scalable product. We have the asset management teeth now to really build this business out. And we've got an infrastructure, and we've got a pipeline, and we've got the institutional interests that are looking at us. So I'm very confident. I'm very happy with how things have gone, how the integration has gone. And we're really, to be honest, only 2 quarters in. You know, we signed, you know, at the end of March, and we're now in September, and we've some of the changes that we've put in place have been transformatory. So I'm very, very happy with how things are.
That's both your background and the detail in your story is very impressive. But could you tell us a little bit about the strategies you're managing for Hilbert, this scalable product, really, and do you do the risk management around those strategies, or how does it work with these strategies, really?
So we have our flagship product is what we call Basis Plus, and we do it in both in Bitcoin and in US dollar stable coins. And, you know, without getting overly technical, we're extracting yield and alpha out of the Bitcoin ecosystem. So we trade the basis trade, which is the funding rate that sort of ties the perpetual future to the spot market. We arbitrage the Bitcoin futures curve. We utilize yield-bearing stable coins to generate additional yield. And then we arbitrage the volatility surface in Bitcoin. And so, you know, you've got implied volatility, for example, in the Bitcoin ecosystem, where you can be selling vol at 60, 70, 80%. We've had periods over the last few years where it's been even higher than that. There's no asset in the world where you can get implied volatility of those levels, you know. So if you know what you're doing in terms of the experience and the risk management side of things, then there's a quite a bit of alpha that we can extract from what I would call still a quite inefficient ecosystem. So we have Basis Plus. We have a multi-strat product, which has got a number of strategies in there. It's got a momentum indicator. It's got an options trading bit, and it's got Basis Plus in there. So that's another product that we have, and they're both available as SMAs and as Cayman funds. And then we also obviously have Byzantium, which is a joint venture with Xapo Bank, which is a structured credit product. So there's the first multi-strat and the Basis Plus programs are 2 and 20 hedge fund products, but Xapo is not. There's a different fee structure on that. In terms of risk management, Cambridge was really well known for having cutting edge risk management. I started my career at HSBC, and I picked up on something called Ruin strategy. So we utilized that at the very beginning. Then we moved on to using something called Omega functions, and then towards the end of my time with Cambridge, we utilized extreme value theory. And all the risk metrics and the build that we did in Cambridge, utilizing extreme value theory, we use inside Hilbert. It's very much geared towards analyzing the left-hand tail, the distribution. So it's traditional value at risk sort of metrics don't work very well in crypto because the tails are so fat. And I'm also a very, very big believer that that risk is actually a generator of alpha, and it should be embedded in the actual investment process. And so that's what we do in Hilbert. We have something called an extreme value at risk, which is a measurement that is a bit more conservative than your traditional value at risk, but it really actively analyzes on a minute-by-minute basis what the left-hand tail is doing. So it's sort of firmly embedded into the investment process. And the proof is in the pudding. We have not had in our Basis Plus any significant drawdowns. Not that we don't get drawdowns on a daily basis, and this is sort of something that in terms of expectation management that I discuss quite often with our potential investors, in that we can get some daily drawdowns, but we sort of have this sort of down the elevator and up the stairs return profile on a monthly basis. And so so we've got some very scalable product. We trade in the front end of the yield curve, which is very deliberate, where we have liquidity. A number of people got into trouble over FTX, particularly with sort of medium-term Vega exposure. And those are risks that it's great when there's liquidity, but when the liquidity evaporates, then you've really got a problem. So we stay away from that. We're front end of the yield curve where it's most liquid.
And what do you mean by risk is alpha?
Targeting risk and being proactive in looking forward rather than back is a form of alpha. So you can see on our website, there's a paper I wrote 2 or 3 years ago. It's quite mathematical. It can be a little bit complex subject. But when FTX happened, which is sort of the case study that I used in the paper, we started seeing like weird movements in the left-hand tail, in the day and hours before FTX. And that allowed us to reduce some of our risk. So it's proactive, and it is actively targeting risk. So when the risk reward starts going down, you want to be taking less risk. And that's so we look at it in those sorts of terms.
You recently increased your stake in Hilbert Group with 25 million SEK. It's really refreshing to see insiders do those types of purchases. It's rather rare, really. So what makes you so confident about the future of the company?
Well, we've got a great team. So that's one thing. We've got now a business that can scale quite quickly. Raising AUM, of course, it's clearly about the returns. It's very important. But the people have got to be the right people. People have got to believe in the team. And you've got to be able to have the infrastructure to handle the growth. And we have all that in place in Hilbert. So in terms of the stock, it's sort of a convexity trade. If we deliver on the returns that we are currently generating, and we can keep growing AUM, then the material impact on the stock price, is going to be quite large. And so, from my point of view, I'm very comfortable, taking some additional equity into the business, and I'm happy to, put my money where my mouth is, and I'm not done yet.
This takes us over to the last part of the interview. So what is the outlook for Hilbert Asset Management? Where do you see the company being at the end of the next year?
So we have internal budgets. I would like us to get to $1 billion in AUM on the hedge fund business. Byzantium
So that's 220.
220, yeah. Byzantium is it's on its own growth path. I'm very bullish on that too. But on our own 2 and 20 hedge fund business, I would like to see us at $1 billion. We have pipeline that will close this year. I think that we're going to be in quite good shape by the end of 2025. But I really believe that $1 billion is, pretty reasonable for us to target for next year. And if we deliver the sort of the 20% returns that we're targeting, then it's going to be a very profitable year for the group. I'm also, I get asked on my view on Bitcoin all the time. We are running market neutral strategies, and so we don't have any beta. We call it beta, which is obviously the value that Bitcoin moves against the dollar. We're generating alpha, so don't mistake sort of the growth in Hilbert Asset Management as being a play on Bitcoin going up, because it is very, very likely that Bitcoin goes down. We will still generate good alpha. But in terms of the outlook for the ecosystem, the medium term dynamics are pretty good. You've got institutional demand that's going up. Obviously, I'm sure most people that are listening to this understand about the limited supply of Bitcoin. So over a multi-year horizon, I think that the prospects for the BTC ecosystem are very good. The institutional adoption is going to keep going. And that generally is going to be good for us in terms of Hilbert, because the more institutions that are looking to get exposure to Bitcoin, they're going to be probably giving us AUM. They might be looking at our stock as a convexity play on the ecosystem. And so, yes, I think that that sort of plays into things as well. Now, that's not going to say that that Bitcoin will not have its moments on the downside. But I think if you look at this over a medium-term horizon, then I think the outlook for Bitcoin is pretty good. And of course, that's going to mean that the outlook for Hilbert will be good, because we're going to have more opportunities to raise assets from institutional investors.
Okay. That sounds very exciting. And I can just remind the listeners that on etcase.no/Hilbert, you'll find our walkthrough of the numbers, and you can really see the sensitivity on the stock price, on how much AUM comes in on the 220. It's pretty remarkable, actually. And where do you see the AUM coming from? What kind of investors or institutions are interested in this space as of now and going forward?
Yeah, well, we're really focused on institutional, relatively larger tickets. And, the nature, Hilbert is a listed business. So we do quarterly filings. We are responsible to our shareholders and people when we're giving out information, because it's a listed business, we have an auditor. Then that information needs to be accurate. And I think that institutions, high quality institutions, get some comfort from that. So we are absolutely focused on the institutional side of things and not giving people a reason to say no. It's not my job to convince someone to buy Bitcoin. Our sort of job comes in when somebody has already crossed that threshold, and they then they're holding that Bitcoin and they want it to earn its keep, as it were. And that's where our yield enhancement strategies come in. So I'm not going to sit here and sell Bitcoin to anybody. And I'm not a Bitcoin maxi. That might disappoint a few shareholders, but I'm not. I'm an asset manager. And I look at Bitcoin as an asset class. And to be perfectly honest, I am just as comfortable being short it as I am long it. I'm a realist. And I think that the prospects for increased growth in the ecosystem and in the price of Bitcoin are quite significant.
We saw on LinkedIn that you typed or you wrote that Hilbert could be a unicorn. Would you elaborate on what you mean by that? Because that can be.
Well, I think it can be. We can grow this to. I would like to think, and I wouldn't be doing it if I didn't believe this, that we could over the next 2 to 3 years grow our assets to a larger level than I had in my old hedge fund, and I think people can do the maths as to what that will do to the stock price. The reality is that an asset management business sort of gets valued on multiples of both its performance fees and its management fees. And the quality of those fees and the diversification of your investors affect those multiples. But in general, as a rule of thumb, if we raise $100 million, then it will probably add around 30 million of market cap to our valuation, depending on what the multiple is. That's not a hard and fast. I'm not saying hold me to that, but in general terms, and everything that I'm talking about here is what I'm going to call the traditional, let's call it centralized asset management business, which is the world that I come from, which is going and talking to sovereign wealth funds and banks and family offices and that want to get some exposure to Bitcoin. But there is a huge market on the decentralized on-chain ecosystem as well. There are a lot of significant players out there that are holding Bitcoin on-chain. They are not going to want to take it off-chain. And we're in the process of building Synthetica. We did a raise for it a couple of months ago, which I invested in. And that is really targeted at those types of people that they're going to be on the other side of the asset management coin. So they will be giving us Bitcoin on-chain, which we will then generate yield from. So they will get effectively a tokenized version of our fund, and they will get the yield that we're generating on-chain. And it's very hard for me to predict, how big that goes, but I do know that there is appetite out there for these types of products, and so Synthetica is something that we're very hopeful will grow, alongside our traditional asset management arm.
Yeah. All right, Russell, thank you for participating. It's been a pleasure to have you on, and I think all the Hilbert investors and curious potential investors are going to be delighted hearing the interview. So thank you.
Thank you very much. It's been a pleasure.